All right, last section of chapter 5 has to deal with something called petty cash. So petty cash is an amount of cash that is kept on hand for paying small amounts. Sometimes it's called a slush fund. It's just like on-hand cash in the business that we can use. It is an asset. It does have a normal debit balance. And we're going to start with an amount in the petty cash fund each month. And then whatever we use throughout that month, we'll go back and charge to the certain expense accounts that it should have been charged to all along, but maybe we just didn't have time to deal with it at that moment. So if we use our petty cash fund, we normally take the cash out. We write on what's called a petty cash slip, saying what it was for, where it should be charged to later. And then at the end of the month, we take all those petty cash slips. We figure out how much has been deducted. And then we physically count what's in that little petty cash fund. Hopefully they match. If they don't, we make a correcting entry. And then we go back and we charge the accounts that should have been charged to. So the petty cash slip is going to include the slip number, the date of the transaction, who we paid money to, reason, the amount, the account it should be recorded to later, and then a signature of the person approving the payment. The slips are always going to be kept together in the petty cash box until the fund is replenished at normally the end of the month. We also might have to replenish it before that if our dollar amount in the petty cash fund drops below a certain amount. So first we're going to take our ending balance, add up all our petty cash slips, subtract them, and then that should equal our petty cash amount. Then at the end, we have to go and journalize that entry also. So we have to journalize establishing the petty cash fund, and then we have to journalize what happened in that petty cash fund. So let's go do just that. All right, so working papers 5-4. We are preparing a petty cash report for November 30th of the current year using the following information. The total amount in our petty cash fund is $200. And we have 2 petty cash slips. One is for $24 and it should have been posted to postage expense. And then we have one for $20, which was just a miscellaneous expense. The actual amount of cash in the petty cash box is $154. So we're going to use November 30th of the current year. And we are the custodian. So first we're going to put on our date, November 30th. The custodian is us. So we're going to enter the student signature. Next, we start with our fund total. So the amount in our fund is $200. We had 2 payments come out of our petty cash fund. The first one was $24 for postage expense. $24. The second was miscellaneous expense, and it was for $20. So we're going to add up those 2 payments, $44. Then our replenish amount. So if we used $44, then we need to put $44 back in for the next month. So we're back up to $200. The recorded amount on hand, if we take that $200 that we started with and we subtract our $44 that we said we used, then we should have $156 left in our petty cash fund. They tell us that the actual amount of cash was $154. So we say there should be 156. When we physically counted the cash, there was 154. So we're $2 short. So $2. So we're going to have to add in another $2, meaning our total amount that we're going to have to replenish is going to be the amount that we recorded as payments, and then if there was any cash shorts or over. If we would have been over, then that would have made our amount to replenish go down. So we owe $46 back into the petty cash fund for December 1, since this is the end of November. All right, step 2, we have our completed petty cash report, which is what we just completed. We have our chart of accounts. So we have all of our expense accounts, assets, liabilities. They did not put owner's equity on there for some reason, and revenue. We have 2 transactions that we are dealing with. So the first one is paid cash to establish our petty cash fund of $200. And we wrote check number 64 to do that. So November 1st, petty cash is going to be our debit for 200. And since we wrote a check credit cash, $200 is coming out of cash. Our source document is going to be C64. Okay. Next, we're at the end of the month, and now we are paying cash to replenish the petty cash fund, which was $46, which we just found that on our petty cash report. So the 30th. Now, we are going to be listing the account titles that are getting the debit. So we're going to need our petty cash report again. And our first account is going to be postage expense. And that was for $24. Our second account is going to be miscellaneous expense. And that was for $20. And then our third account is going to be, wherever, there it is our cash short and over. Which in this case, we were $2 short. If we were $2 over, then we would put the $2 in the credit side, but we are $2 short. So those 3 numbers added together, $24, $20, and $2, all add up to our $46 that we are going to write check number C86 for. Okay. And that is the end of chapter 5, all about a petty cash report. Don't forget to do the on your own and terms.